Hello, and welcome to week 31 of the No-BS Homeowners live series. I am just going to go ahead and pull up our information for today and get that going for you, and then we will go ahead and get started. But I think a big myth about homeownership is that people think as long as I can pay the mortgage, I'm good. Like that's all it takes to be a homeowner is just paying the mortgage. Well, your mortgage is only one piece of the puzzle. And today we're going to go over a realistic monthly housing budget so you know kind of exactly where your money is going, how much it's actually costs to be a homeowner, and that way you're better prepared for when you are a homeowner, or if you are currently a homeowner, just really understanding what is realistic for a monthly budget. And if you didn't know, this is the No BS Homeowners live series where we are helping homeowners protect their investment, build wealth, and enjoy home ownership with practical no BS advice. So join along with me as we go over this, and we'll just kind of talk about what homeownership is really costing, because your mortgage payment isn't the whole budget, it is just the beginning. All right, so let's touch on the mortgage payment and what a mortgage payment is actually made up of. So in the industry, we call it PITI. I've never really heard it called PITI, but PITI is what you'll hear oftentimes, and that is what your mortgage payment is made up of. So that would be the principal of the loan that you took out, the interest on that loan, taxes, and insurance. So what's really important is the principal is what is going to remain throughout the 30 years. That number should never change. The interest, the percentage that you're paying on that loan will remain the same depending on what kind of loan you get. If we're talking like a 30-year fixed rate, like the interest amount will stay the same, so like 6%. However, the amount of interest you're actually paying each month is based off of what is remaining on the loan. So that's why they say if you make extra payments, you can cut how long you pay on the loan by like 7 years, if you make one extra payment a year. So the interest is based off of the loan balance. So the amount of interest you're paying can change, but the rate at which you're paying should remain the same if you're on a 30-year fixed. If you're doing an adjustable rate mortgage, you should have a lot more education about this before and should have a much better idea of what's going on with that. But that is what caused problems back in like 2008. They have gotten much more qualified, and they have a much tighter leash on them. Anyway, and then the rest of your mortgage payment is made up of taxes and insurance. Taxes are typically based off of whatever the assessed value is, and then your local tax rate. That can change every year. Sometimes we see it every 2 years. It all depends on if your property assesses higher or lower, or if legislation changes your tax rate. So hard to kind of budget for, but just be aware most of the time they go up. And then insurance, that can change every year and likely will. And I have not had any luck with my insurance rates going down. So I would also assume that insurance rates are going to go up through time as well, especially if we are having extreme weather, or if you live in a state with extreme weather like Nebraska or Florida, the two highest insurance rate claim states. So just don't assume that taxes and insurance are going to go down. Your principal should remain the same, and your interest amount you pay in theory should go down. But the percentage will remain the same. And then another thing to kind of take into account that isn't part of your mortgage payment, like you won't pay for it in your monthly payment, is HOA dues. That is something that will be lienable against your property, much like your mortgage. But that is not part of your monthly mortgage payment. And when we say mortgage payment, in most situations, you're paying in your monthly mortgage and they're escrowing for taxes and insurance. If you bought the house cash or don't have a loan on it, you likely are not escrowing for taxes and insurance. So you want to make sure you're setting those aside separately. And escrow, when you are paying it in an escrow, it's just like a separate bank account that they set aside and then have that money there for when those fees come out. So insurance annually, and then taxes typically biannually. Um, and if there's a shortage, they will let you know, but it is based off of the last year, and then typically they'll mail you if you have more. But okay, so that is what the mortgage payment is. And I know that was just a lot, but there's additional costs with being a homeowner that I think need to be budgeted for, and what we're going to really kind of talk about. So some of these hidden costs that you would have had a lot of these while you were renting, unless you're coming from a situation like, say, you moved out of your parents' house and they didn't charge you any utilities or bills or rent. Then all of this stuff is new information and should be considered when calculating your housing budget. But homeownership doesn't really get expensive because you've got one huge bill. Like, obviously the mortgage payment is probably the biggest single bill, but it gets expensive because there's a lot of other little things that are included with owning a home. And that is the utilities. I mean, we're talking gas, electric, water, trash, sewer, those expenses, lawn care, snow removal if you live in a state that has lots of snow, or if you live in a state that has a lawn. Some are not. Some are just rocks, like Arizona. Pest control, so we're talking like bugs, mice, different things like that. HVAC filters and just general servicing. If you service your AC in the right before summer, and if you service your furnace in the fall before winter, also very good habits. Cleaning supplies, maintenance supplies, and if you're like me, tools should be part of your budget because we love a new tool even if we only use it once. I'll recommend following my advice there. But these expenses are not unexpected, but if you don't know about them and don't budget for them, they can feel unexpected. But these are all expenses that are part of being a homeowner and should be taken into account when you are budgeting for your home, or if you already own your home, just having that budget money set aside. All right. So let's talk about maintenance, savings. So last week we had talked all about maintaining your home and the good habits to build while doing that. This week we're talking about how to pay for that. So having a monthly maintenance fund, I know I touched on this last week a little bit, but I would typically save at least 5% of like whatever your monthly mortgage is. So if you pay $1,000 a month in your mortgage, you should be saving like $50 in your maintenance fund every month. And whether or not you use that, that's okay, because eventually you're probably going to spend more than $50 on whatever maintenance you're doing. So save it up, because maintenance is a lot easier and cheaper when you're budgeting for it, because then it's not such a kick to your wallet. So I always recommend putting a little maintenance fund in like high yield savings account, something that's easily liquid and accessible for when you need it. And I also always recommend to try to save for the highest deductible. So let's say your homeowner's insurance deductible requires $5,000 before they will pay out anything. So let's say it hails on your house and now you have to replace your roof. Well, at least in your savings account, you have that $5,000. And, maybe something else happens, like the water heater goes out and you've got coverage on your insurance and that deductible is only $1,000. Well, congratulations, you have an extra surplus in your savings. So that way, if the most expensive thing happens, you're not scrounging for money and feeling really stressed at that point. But we just want to kind of keep some savings because we are going to have some servicing things. You might have to trim the trees one year or pay someone to clean your gutters. Little things happen. Welcome to home ownership. That is part of it, but having that savings set aside and prepared is much better and much cheaper when you've already budgeted for it. All right, so when we're building our true housing budget, we really need to take into account all of these things we've already discussed. So your mortgage, utilities, maintenance, the HOA, lawn care, insurance deductibles, and home improvement funds. Even if you're not spending all that money, having it building up in your saving is great because then it will be there when you have a surprise or have an emergency. That is just really what we need to be taking into account. We need to kind of look at all those line items, add them up, so that way we are recognizing what our actual monthly housing cost is. So that way we are living building equity and not becoming house poor. So I recommend my buyers really kind of look at these things even before they purchase. But if you didn't do that, and this is, you are now owning a home and you are kind of trying to understand what it is actually costing you, these are the places you need to be looking. Um, and I think we'll talk a little bit now about saving money on these big expenses, because if you can be intentional about like these three big things, you can really potentially save a lot of money, keep your budget in check, and live a happier life as a homeowner. But we can't eliminate every homeownership expense. You couldn't do that when you were renting either. But we can be very intentional about managing them, especially if we've never had this experience of being a homeowner. Having knowledge of these and recognition of these will help you have a successful homeownership life and make it feel much more warm and happy rather than, fearful and emergent. So one of the easiest and probably the biggest way to save money quickly is to shop insurance. Get a new insurance quote every year. Honestly, just set it up on your calendar. Have all your information just saved in like a Google Drive, and then have that ready to send every year to your insurance broker, or have a couple different insurance people that you just send it out every year and say, hey, what can you do for me this year? You may need to make sure that you're comparing like the premium, the deductibles. Sorry, I thought that was a weird word. Coverages, and then if there's any discounts for bundling, it's definitely worth exploring. Like if you bundle your home, auto, those all can have really pretty good insurance savings. And you really don't know if you're paying a high amount until you shop around. And I will tell you, loyalty does not matter in insurance. Will definitely try to make you feel special. And I think there is absolutely value in having an insurance agent that is communicative. But just because you've been with them for 10 years doesn't mean they're going to give you a good deal. Hate to be that way, but that's just kind of how it is. So don't be afraid to shop around. That is probably one of the areas that you can do the least amount of work but save the most. Another one would be to review your property tax assessment. Now, please keep in mind this is not tax advice, but kind of just touching on what's happening. So your county every year or every couple of years will be reassessing your property and comparing it to comparable properties that have sold. So this is what gives you your assessed value, and typically you are taxed on that assessed value. You can look this up. It should be online in some public registry, like the County Assessor of Deeds. And if you're looking at it and you're like, wow, I absolutely don't think I could sell my house for that number if I had to today, you should probably be arguing that number with your assessor. It doesn't mean that every assessment is going to be wrong, but it is definitely worth looking at and checking into. And if you have questions on what your house is worth, ask your realtor to run some comps so that way you can see. And then if you decide, we're like a pretty good amount off, like if we're 20 grand off from what it would actually sell for, it's probably worth arguing, because what you're getting taxed on is based on that assessed value times whatever the tax rate is. So if you can reduce that assessed value, you then in turn reduce your tax rate, so your total tax, not the rate. Anyway, just something to consider. And if your house is way overvalued, this can be a really effective one to reduce how much your monthly cost is going to be. And then lastly, track your utility bills. This one does get a little bit more in the weeds, but if you're not paying any attention to it whatsoever, that is where it can really start to cost you. And the reason I say this is because maybe you're like just looking at your electricity, and on average, it's totally fine, or your gas bill seems pretty on average. And then all of a sudden you look at your water bill and you're like, whoa, it is wintertime. I'm not even watering my lawn, and it's 3 times what it costs during the summer when I'm watering my lawn. That is a huge red flag. That's something that, something's wrong, something's not working properly. It could be like a running toilet. You could have a water leak somewhere. Different things like that can cause more expensive bills. So if you're just kind of keeping an eye on your bills, you will see the big changes. Obviously, seasons kind of change a little bit too. Just like wintertime, if you've got a gas furnace, you're probably going to have a higher gas bill because you're running that more often. But even with that, like if it's out of the norm, you might need to be changing your furnace filter, or maybe you need to get it serviced. Little things like this, changes in our utilities, can be signs that there's a bigger problem. And if you fix that bigger problem, you can, maybe save some money on those utilities. And if you want to get really in the weeds, there's some like seriously frugal people that will teach you how to save lots of money on your utilities. But I have a certain standard of living, and I don't care to be in coats and jackets all winter just to save a little bit of money. But anyway, those are probably the big three things that, if you can save some money on these, this will help reduce your monthly cost of home ownership. But ultimately, what the reason we want to look at this stuff and be aware of this stuff is so that way when we are homeowners, we aren't house poor. We bought a house so that it could support our lifestyle, not so it could just become our life. So keep in mind when you're budgeting for buying a home or as you buy a home, keeping those costs kind of in check so that way you can spend on the things that really bring your life joy, like vacations or retirement, date nights, or giving. Philanthropy is always good. So by paying attention to these things and the costs, it helps us live the better life that we really wanted when we became a homeowner. We wanted some freedom. We wanted some flexibility. Let's not make the cost of home ownership reduce that for us. Just be very intentional and budget that ahead of time. And that is pretty much everything. Here's kind of the quick recap of everything we've talked about, what homeownership really costs each month, making sure you understand your mortgage payment, budget and plan. Preparation helps in so many things. And if you're just taking an active approach towards it and just even recognizing it, even if you don't track it as crazy as I suggest, like just be aware of what it's costing you and know to look out for these little things. It will go a long way. Don't be afraid to haggle if you have to. Save some money where you can. And remember why we wanted to be a homeowner. So don't become house poor. Pay attention to these things, because owning a home shouldn't mean financial stress. Owning a home is to help you build wealth, to give you a safe place to live. But it does require a little bit of different planning and active recognition of what needs to be done. But thank you for joining me today. And as long as we have no questions, I will touch on what we're going to touch on next week, which is one of my favorite topics, renovations that actually add value. So if you are budgeting for your home or the home that you currently own and you're thinking about renovations, we're going to talk about the ones that actually maybe put some coin back in your pocket or are worth renovating and spending your money on. But thank you so much for joining me. This is the No-BS Homeowners live series where I'm helping homeowners protect their investment, build wealth, and enjoy home ownership with practical no-BS tips and advice. So thank you for joining me, and I will see you next week.